During Friday's Asian trading session, spot gold continued its oscillating trend within the historical high range, displaying intensified volatility as bulls and bears battled for control. The price steadfastly held above the $4,900 psychological level, maintaining its strong overall pattern. The consolidation at these elevated levels stems from a tug-of-war between safe haven support and profit-taking pressure. Amidst this conflicting logic, the market has adopted a cautious wait-and-see stance. On the support side, geopolitical uncertainty remains the bedrock for gold prices. Although the US and Europe reached a so-called framework agreement regarding Greenland, the Greenlandic Autonomous Government denied the specific details and emphasized that sovereignty is an insurmountable red line. The rift between the US and Europe has not truly healed, and the power struggle over Arctic interests continues. Furthermore, the slow progress of the Ukraine peace talks, combined with the complexity of the global geopolitical landscape, has prevented a significant retreat in safe haven sentiment. Consequently, holdings in the world's largest gold ETF, SPDR, remain at a two-year high. Robust institutional demand provided immediate buying support after a pullback to $4,930, quickly pushing prices back into the upper range. Additionally, expectations for a dovish Federal Reserve policy persist. Market odds for a rate cut in March remain above 50%, with a consensus for 225 basis point cuts in the second half of the year. This, coupled with the US dollar index plunging 0.5% to close at 98.29 on Thursday, it has further enhanced the appeal of gold as a non-yielding asset, serving as a key driver for gold to maintain its record highs. The market is now awaiting the release of the U.S. Core PCE price index later today, as the Fed's preferred inflation gauge. This data will directly influence expectations for future monetary policy and, in turn, dictate gold's trajectory. From a technical perspective, the daily chart for spot gold shows a continued strong upward trend, with the moving average system aligned in a bullish formation. The 5-day moving average provides immediate support, despite a slight dip in the Asian session. The overall technical structure remains intact. Looking ahead, the immediate support level is at $4,930, today's session low and a recent buying concentration area. Holding this level keeps the door open for another test of the highs. Initial resistance is seen in the $4,970, $4,980 zone, a short-term high. A lower-than-expected core PCE reading would strengthen rating cut bets, potentially propelling gold towards the psychological $5,000 mark. Conversely, a higher-than-expected reading could cool rate cut expectations, triggering a phase of profit-taking, with the next support at the $4,900 psychological level. In the short term, gold is likely to consolidate within the $4,930, $4,970 range, awaiting a clear directional cue from the core PCE data. Traders should continue to monitor developments regarding the Greenland issue, Fed policy signals, and the US dollar index. The dual dynamics of geopolitics and monetary policy will remain the core factors dominating gold's trend. Disclaimer: all content is for reference only and does not constitute investment advice. Investors trading based on this information assume full responsibility for their profits and losses. Please subscribe, like, and share. Thank you for watching.